So what is an accounting entity? So an accounting entity is a clearly defined as a separate and distinct business unit for accounting purposes. An accounting entity can be a corporation or sole proprietorship as well as a subsidiary within a corporation. So an accounting entity must have a set of books or financial records detailing its assets and liabilities that is separate from those of the owner. So how an accounting entity works. So although maintaining separate accounting entities provides management with useful information, more company resources are needed to maintain the financial reporting structure as the quantity of entities grow. So we need also to remember that accountant must maintain separate records for separate accounting entities and determine the specific cash flows from each entity. So the things we need to remember is the separation of accounting entities is important because it helps with proper tax accounting and financial reporting. However, multiple accounting entities can be aggregated into company-wide financial statements.
So, what is accrual basis accounting? Accrual accounting generally makes the relationship between revenue and expenses clear and providing better insight into profitability. It also offers a more accurate picture of a company's assets and liabilities on its balance sheet. For these reasons, accrual basis accounting is the only method allowed under General Accepted Accounting Principles, and it's required by the Security and Exchange Commission for publicly traded companies. How does accrual accounting work? Accrual accounting works by recording accrual on the balance sheets that acts like placeholders for cash events. For example, accounts receivable is an asset accounting that reflects revenue of a company has earned but hasn't yet paid for. Similarly, accounts payable is a liability account that reflects amount the business owns but hasn't yet paid.
Business is expected to continue indefinitely. Going concern is an accounting term for a company that is financially stable enough to meet its obligation and continue its business for the foreseeable future. Certain expenses and assets may differ in financial reports if a company is assumed to be going concern. This term also refers to a company's ability to make enough money to stay afloat or to avoid bankruptcy. Example of going concern. A state-owned company is in tough financial situation and is struggling to pay its debt. The government gives the company a bailout and guarantees all payments to its creditors. The state-owned company is going concern despite its poor financial position, meaning that even though the company has financial problems, they were still able to keep the company running and operating. So is going concern good for the company? Considering that the company has some financial problems, going concern is good for the time being, since it's still able to make payments to keep the company operating.
I'm Norhani Pasaripada, and today I will discuss the monetary unit. According to this concept, amounts are stated into a single monetary unit. So meaning in the Philippines, you will only use Philippine pesos if your business is based in the Philippines. Of course, if you are American based, what is their currency that will be used only? Assume that the value of the currency you used 5 or 30 years ago is the same value today. For example, the value of 1,000 will still be the same value in the coming years.
What is time period? The time period is the amount of time it takes for a complete wave cycle to pass a point. In addition, the time period principle is an accounting principle which states that a business should report their financial statements appropriate to a specific time period. Let's consider the graph shown in the screen. It shows the displacement y of any element along a string traveling in the positive x direction with respect to time for a harmonic wave. The string element in this arrangement goes up and down in a basic harmonic motion. The following is the relationship that describes the element's displacement with respect to time. Y equals y o t is equals to a sine omega t. Here we have considered the inception of from x equals 0. Y o t is equals to negative 8. Sinusoidal or harmonic motion, as we all know, is periodic in nature, meaning that the nature of the graph of a wave element repeats itself at a constant frequency. For sinusoidal waves, the following terms are given to represent the duration, the periodicity. And that's it for time period.
The cost principle. This principle states that acquired assets and services should be recorded at their actual cost. Depreciation. When the value of long-term assets decreases over time, for example, terms assets decreases over time back at Mark's example. She acquired a piece of equipment and cash value of $1,000, which has a useful life of 5 years behind a straight-line depreciation. Method: a depreciation expense of $200 will be recorded each year. This would be reflected on the balance sheet as in struggle cost of $1,000 minus the accumulated depreciation of $200. Advantage of cost principle. Now, since assets that you recorded at cost price, it is very easy to use, verifiable, and the disadvantage of cost principle are accuracy, intangible assets, and
The principle states that the minor amounts can be grouped together with other similar kind or function and do not need to be presented separately. Materiality is determined by the item size and nature. For example, small value assets such as pencils, sharpeners, and paper clips should have been written down to the profit and loss account as cash outflow, even if they were used throughout multiple accounting periods. In short, we can include minor amounts in the materiality principle. Papers, pencils, and the things that have small value assets need to be put in the profit and loss account as cash flow, regardless of how many times they are used.
So what is the conservatism principle? So the conservatism principle is the general concept of recognizing expenses and liabilities as soon as possible when there is uncertainty about the outcome, but to only recognize revenues and assets when they are assured of being received. Under the conservatism principle, if there is uncertainty about incurring a loss, you should tend toward recording the loss. Conversely, if there is uncertainty about recording a gain, you should not record the gain. So the conservatism principle is the foundation for the lower of cost or market rule, which states that you should record inventory at the lower of either its acquisition cost or its current market value. So the conservatism principle is only a guideline. So as an accountant, use your best judgment to evaluate a situation and to record a transaction in relation to the information you have at that time. Do not use the principle to consistently record the lowest possible profits for a company.
The objectivity principle in accounting is a principle that says that all financial statements must be reliable and relevant, reliable enough to be trusted and be useful in evaluations and decision making, and also relevant that it is really connected to the financial statement so that it can also be used for future company performances. Also, based on its name, the objectivity principle in accounting needs to be objective and bias-free so that investors and creditors will not have a chance to hesitate to trust the company. It should be independent and based on research or facts and not from anyone's opinion but only to what is shown along with its evidence. The objectivity principle can be a big help in external decision making and negotiating to other companies.